There are thousands of stocks available to trade on the market, which means there are even more potential option contracts that you can trade. With all of these numbers and charts and data, where do traders even begin to look as they're trying to form a trade idea? One answer is a scanner. In short, a scanner is a tool that helps do the legwork for you as it scours the market in search of stocks that match the specifications you're looking for. So how do we choose these specifications? Let's get into it. Welcome back to the Hourglass Trader, where as time passes, we make money. So on the screen right now, we have TD Ameritrade's Thinkorswim platform, and we have the Scan tab up. If you don't have access to TD Ameritrade, or you're not from the United States and can't open an account with them, there are a lot of other generic scanners that might be available either through your broker or somewhere online. And we'll try to link to some of those online scanner resources that you could use to set up something similar to what we're about to lay out in this video. So since we like to sell options, we love starting our HT wheel strategy with cash secured puts. For the purpose of this video and running through how to set up a scanner, we're going to build a scanner that gives us the highest returning puts that are slightly out of the money in the market at a given time. So there are going to be 5 elements to this, and it's going to be implied volatility, percent out of the money, days to expiration, return on risk, and volume. So let's get into each of those as we build our scanner step by step to try to pull what we're looking for, which is high premium puts that are on the market expiring soon. So the first element that we mentioned, we're going to add a filter here for options, is implied volatility. And just to back up a little bit, you go to the scan tab, it's probably by default going to have you on stock hacker. You're going to want to move over to option hacker so we can scan for options as opposed to stocks. So we're going to look for implied volatility. So why do we want this? We love implied volatility as option sellers because it means high premiums. And when we're looking to sell options, we love high premiums because the higher the premium, the more money we're going to make. So for this, we're going to make a minimum of about 75% of, and that's going to be expressed as a percentage. So 75 with no max on it. We don't want to cap the implied volatility because objectively, just the higher the better on stocks like this. So the second filter, you go right here to add another filter, is going to be another option filter, and we're going to filter for percent out of the money. See if I could find it here. Right there at the bottom, percent out of the money. So when we sell options, we want to take advantage of extrinsic value, since that's the portion of the option that is subject to theta decay. By selling an out of the money put, which is what we're going to establish right here, we ensure that 100% of the premium we receive is extrinsic in nature, and it maximizes the benefit that we receive from theta decay when we sell options. So we're going to put this in right here with a minimum of about 0.5%. What you do, as long as it's below 1 or something like that, it doesn't really matter. And we're going to put a max of about 7% on here. Now, normally you would say, why do we want to put a max on this? I want to get all the options possible. But if we have no limit, our scan's just going to be flooded with different expiries of the same ticker. So this way we kind of cut down a little bit on the amount of data that's being thrown at us, because sometimes when you run a scan like this, it can be a little bit overwhelming, and we want to cut down on the amount of tickers we see. So if there's something that's offering a lot of premium, it's going to show up on here a lot if we didn't cap this off, because it's going to show just about every single strike that they have available. So putting this cap of 7% limits that list of options that we're going to see on here, makes the data a little more digestible, and gets us a little more variety in the amount of tickers that we see, which is more useful as we try to come up with trade ideas. So that covers the first 2 tickers. Let's add another filter, and our third is going to be another option one, and it's going to be days to expiration. And this filter is thrown on here to get a list of options expiring this week. So we're going to have a minimum of 0 and a maximum of 6, which should give us options expiring within the week. Now, this is a personal preference of mine because in general, you're going to receive more premium by selling 4 consecutive weekly contracts than 1 monthly option. So to kind of illustrate this, let's take a look at AMD, for example. So if you look at the January 22nd, just out of the money puts, we'll do 87.5. They're going for about $1.75 of premium. Now, if we click down here into the next monthly set, which is going to be February 19th, those same 87.5 strike puts are going for about $5.50. So that's a pretty big difference. Now, when you're opening short-term plays, you open yourself up to some other risks, which involve short-term price movement. But as long as you're comfortable with taking assignment, running the HT wheel strategy that we outlined, when we sell cash secured puts, then all those short-term risks are going to be mitigated. So just to kind of tie this all back together, we have this filter on again, just because we believe that selling puts as close to expiry as possible as demonstrated over here by the fact that these cumulative weekly options bring more premium than one monthly option. We believe that selling puts as close to expiry as possible is the most profitable strategy that we can run when we're running an option selling strategy. So that's why we have this days to expiration between 0 and 6 to give us a list of weekly options. So let's jump to our next one, number 4, and this is arguably going to be one of the most important ones we have on here, and it's going to be return on risk. This kind of goes hand in hand with the first filter, as it's designed to pull in the best premiums in the market. Return on risk is essentially equal to the return you receive on the amount of money that you risk, obviously. So in its purest form, I do believe this is the best way to evaluate and search for the options with the best returns on the market. And when we run our put scans and post our trade ideas for the week, return on risk is really the metric that we use, since that is the one metric from a profitability standpoint that takes in the amount of cash you're risking when you fully cash secure puts the way we do when we run our HT wheel strategy. So we're going to have this at a minimum of about 1.75%. And this is another one that we're not going to want to cap on because the higher the return, the better for us right here. So that's going to take us to the 5th and final filter that we have on this basic put scan that we're putting together. It's going to be another option filter, and it's going to be for volume. So we'll scroll down here a little bit and we'll find volume near the bottom of the list. So this is the 5th and final filter like we mentioned, and this represents the number of contracts that were traded that day for a specific option. Putting a minimum volume of 20 in here, as we're going to do, ensures that all the results I see in my scan are actually things that people are holding and trading, instead of just getting some odd outlier from a weird bid-ask spread for an order that really wouldn't actually fill if you put it in. So we have all that together. This volume filter that we've capped this off with ensures that all the options we see on here are going to be tradable and going to be actual ideas that we can pursue with our own money and our own trade ideas. So there you have it, all 5 of those. And just to run the scan, you're going to hit this down here, the scan button, obviously. And it's going to tell you you've requested a very large amount of information because this literally looks through every single ticker on the market. But that's going to be okay. It's not going to do anything too crazy to your computer. And you can go up here to minimize it. You'll see it's bringing up about 253 stocks. So kind of looking at this list, it's a lot of information to digest. So how do we kind of cut into this and determine which of these are the most profitable puts? Well, we'll go back to that filter we talked about, which is return on risk. So you'll see from the basic display right here, you don't really get any information about the return on risk. You get the symbol, you get the description, you get the last price of the option, the change during the day in the price of that option, which can be super useful. But when we're scanning for high premium puts, we're going to want that return on risk information. So if you go to the little settings cog and go to customize, you're going to be able to see all these different things that you could pull into your scan table and your results. So if you go down here, remember it's called return on risk, and I'm probably doing this the most painstakingly slow way by just absolutely scrolling from top to bottom here. We're going to get return on risk right in the R's, and we're going to add that item. And just for a little more visibility, we're going to move it up right next to percent change. So if we click OK, we'll see return on risk pop up here. And again, this varies pretty wildly, and it looks like it's sorted. And it looks like it's sorted without really much order. But again, this is kind of what we want to look at. So you could go up here and choose what you want these results sorted by. So if you go into optionable underlying metrics, you're going to see down at the bottom again, you have return on risk, and it's going to sort it by that. And again, that's what we're looking for. I probably sound like a broken record at this point in the video, but return on risk is really what we're looking for because that's one of the single best indicators of profitability of an option. So we'll run that scan again. It'll give us our results, and I accidentally did ascending. It should be descending. So we'll try this again. And there you have it. So this is going to pull the highest returning out of the money puts on the market today. Now, since we're doing this on a weekend, this is going to be pulling data from Friday at market close, but a lot of these should be actionable by the time the market opens for the next trading week. So this is really kind of the list that we were going after, and with those 5 filters that we put on, we were able to come up with. So if you're looking through here, just because something's on here doesn't mean it's a good trade idea, and that's probably the first and foremost point that I want to make as we're going through this. Just because you're able to run the scan and pull all these return on risk items doesn't mean that, okay, I can get a 15.7% return getting max profit on this. I should do this. Well, let's look at GameStop, that's one that's been in the news a lot lately. So if we take a peek at the chart, You might not want to get in on this because if there's any sort of reversion to the mean, you could see a price down in the high teens, low 20s if it goes down to where it gapped up from previously when it was short squeezed. So that's one that you might not want to go after, but again, this is really just for informational purposes as you're trying to form trade ideas. So there you have it. This is how you throw together a basic scan in Thinkorswim that fetches the puts with the highest returns in the market. And again, we did this on the Thinkorswim platform, but any basic option scanner should have similar inputs if you wish to build this yourself on another platform. The next step after this is taking the information we receive here and generating meaningful insights to form trade ideas that we can act on. We'll go over how to evaluate potential candidates for a trade in a future video, but for now, we'll leave you guys with the basics on how to scan for good premium so you can play around with it for yourself. In the meantime, subscribe on here and give us a follow on our other social media platforms. Our Discord chat is 100% free to join and is full of like-minded option sellers of all account sizes and experience levels, so if you're looking to learn how to safely and effectively sell options, you'll be sure to fit right in. Until next time, this has been the Hourglass Trader, where as time passes, we make money.